Good day, everyone. Today we are going to talk about entry triggers, as how we should take our entry. Before we take our entry, or before I take my entry, there are rules and tools I do use. So first and foremost, you go to higher time frame. When you go to higher time frame, you mark out your zone, though I prefer marking out my zone on H4. I'll mark out my support and resistance zones. Sometimes I do use Fibonacci retracement to mark out my zone. Sometimes I'll mark it manually without the so I'll mark out my zones. The important ones where price respects the most. Let me use this. Because price respected here a lot. So as you are marking it out, you'll be taking note of what is happening. This is a fresh zone. You can mark it out on its own, because price must come there. When price comes there, so okay, let me mark out the supply. We mark out the supply zones. You must not mark everything. So as you've marked out your zones, you've marked out your support and resistance zones on H4, because that is where you get your precision from. You get the accurate direction of the trend. Like as you can see, this is actually a downtrend starting from here, starting from the higher high here. It's a downtrend. There's no need to. It's in a downtrend. Price is in a downtrend. And when you go to daily, you see that price pushed up. Price pushed up from here and still moving down. You go to weekly, you see that price pushed up, got to this place. Price pushed up. Now did okay. And now still going down. As you can see, it's going down. This doji candle shows is showing what happened yesterday. So you go back to your H4, since you have marked it out. Now you can see that this is kind of inverted head and shoulder pattern. Like one, this is the head, this is the left shoulder, and this is the right shoulder. As you can see, it's an inverted head and shoulder pattern. We have seen head and shoulder, inverted head and shoulder. So now price is likely coming up to this place, touching the trend line. If we do the trend line well, price might touch this trend line before then retest the area before moving down. This is the first bias on this GBPJPY. Price will push up, push through before moving down. This is general analysis on this now. So as we have marked everything out, we now know the directional levels, we know the directional movement of the trend. Then what is it that you will see that will trigger your entry? What is it? First and foremost, before, like tomorrow, on Monday, maybe when market opens, price must give a gap, and as you can see here, price was pulling down. It was actually pulling down, so definitely price will push up, gap up. Then when it gap up a bit, it will push down. Let me show you this, what I mean. From here now, on this 5 minutes time frame, price will push up, maybe push up to this other block, this pseudo block here. I call it pseudo block because it's not the main order block, or you can still use other block. Price might push up, gap up to this other block. Then as it has gapped up, it must fill, the price must fill the gap. It must fill the gap before it starts making its normal movement. And as you can see, this is a higher time frame marked out zone. So price will touch here, it will fill the gap. After filling the gap, price will touch this place, retest it, and now start the normal movement here before it now starts moving to its normal direction to our POI, which will wait for the sell, or if you meet the buying part, you can still buy. So when a higher time frame helps us to know what to look for, we know what to look for. So now there are three things I normally look out for each time I want to take my entry. There are three things I normally look out for, and those three things are, I do go to 1 minute time frame. If I go to 1 minute time frame, as you can see, okay, let me use this uptrend as an example. Let me use this uptrend as an example. As you can see here, this is a pin bar. Before I will take my entry on this 1 hour time frame, maybe this part is not available. I met price here. Once I spot this pin bar, which I call hammer, it's called a hammer candlestick. You will see the depletion. Price was moving down. After a while, stay depleting till the market closes. So once I spot this, it gives me first sign. This is the only thing, this is the first rule. I'll make sure that I follow this rule. I make sure that the wick, how will you know that is a hammer? The wick is always 3 times or 2 times, in fact 3 times the body of the candle, the size of this body. If you watch, the body is very small, then a very tiny wick. Sometimes you will not see the wick on top. You see it. Once I spot this, I know that price is the next candle is going to be bullish. No matter how it is, the next candle will be bullish. And this helps me to validate that that price is reversing from here. So once I spot this, I will wait for it to close. And once it closes, I will now go down to, in fact, if I just see this thing happening, I normally go down to my 15 minutes. And if you watch here in 15 minutes, you will still see the depletion. It doesn't matter, the color doesn't matter. It must not be, it cannot say it's green or blue or anything. The colors, I don't care about the color. What I know is that I've seen this depletion, and this depletion gives me a very clear edge that price is reversing. I will now wait for this particular one to close. So what I normally do is I mark out this fresh zone. At even price have not moved. You see it. If you watch from here, here, okay, assuming that this place is not available, that we are just looking at only here, you will see that this place, there's nothing there. This is the first order block, and this one, the 2 places, these are the 2 places that price must come to before moving up. So what I do is, after this one, I still put this one in consideration, because as price is moving down like this, if you watch, here is the first. If I'm supposed to mark this place. Let me mark it. I'm supposed to mark this place for me to know where price will come back to, because definitely price must come back to another block before moving to our direction. It must do ABC pattern before it moves in our direction. So as you can see, price, as I saw this, my entry, I can go to 1 minute or 5 minutes depending on where I want to take my entry. I can go to 1 minute. For me to be on a safer side, I prefer going down to 1 minute. And once I go down to 1 minute, you see that price, the behavior of price is different. Okay, watch here. Look at where we are. Here. This is the downtrend. Look at it here. As you can see, on 1 minute too, there's still this depletion of candle here. As you can see it here, this is the This is the point, the starting point on that 1 hour time frame. So I'll wait for this next candle. That's why sometimes I don't normally get drawdown. Once this candle starts, I'll wait for it to pull back. Sometimes I don't wait. I'll just enter here. And once I enter here, this hammer candle have already given me my sign, my first sign. I will now enter. And if I enter, you will see the way price is moving before you to now come back to retest. This one is the first one that I normally use. It will now come down to retest. Sometimes price, if depending on where you are, if you enter here, nothing will bring your entry back. In fact, nothing will bring price back to your entry sometimes. But sometimes price will come back to retest this place, depending on where you meet your market. Price will still come back here to mitigate this area. So as you can see, this is a very beautiful movement. Price moved up, moved down. It was just creating a higher high, just higher low. As you can see, it's just moving. So that is the first thing for an uptrend. That's the first thing I look out for in an uptrend movement. Then again, let me look for another example. Again, like now, I'm looking for a downtrend movement. What I will look out for again is a shooting star. As you can see, this is a very good example. A very good example of a shooting star. Look at this shooting star. There are 3 important candlesticks that I use. I don't know the names of most candlesticks, but you see these 3. This is the only 3 I can remember. You see it here. Look at it. This is a shooting star. If you see it, the wick of the candle is 3 times the body of the candle. So that's the first rule I will take. I will make sure that the wick of a shooting star candle is 3 times the body of the candle. It helps me to validate that this particular trend is ending and the downward movement is bears are moving in, as you can see. Then I'll still go back to my 15 minutes, check whether the same thing is happening there. I think is it here. Okay, as you can see here, see what price did. Price pushed up this momentum thing, pushed up and still moving down. So I've not seen what I want to see here. I'll still go down to like 5 minutes. If I get down to 5 minutes, I might still see my entry triggers. As you can see again, the bears are moving in. I move down to my 1 minute. I must make sure that everything, I don't rush. I must make sure that everything is moving according to my plan. As you can see here, see the 1 minute. You see the 1 minute. You see the depletion. See the 1 minute. You see another shooting star. That's why I love 1 minute entry. It must give me what 1 hour or 4 hours is giving me. See it. Look at it here. This is a shooting star. And once I spot it on this 1 minute, the next candlestick I will enter. If you watch, price still came back to retest the neckline of this. Price came back, pushed back, retested the neckline. Sometimes I enter here. Sometimes if I'm late and maybe I saw this movement maybe I saw price pulling back like this. I wait for this depletion. Once I see this depletion, I enter. I can enter anywhere. You can enter here. This is a shooting star or inverted hammer. I don't know, some people call it inverted hammer. And the bearish candle is engulfing this one. Even if you enter here, you'll still be in profit. If you watch again, look at another example here on this 1 minute. Once you spot it, price will move up. Look at another example where you take your entry. You can, like, I don't know, I'm not always comfortable scaling mini, but if you want to be scaling, this is the best way to scale. Don't just press positions. Maybe you allow price to come down to this place, then when you spot this, you can buy for some time. Then when you see this shooting star, you take another sell, and as you are taking the sell, you see it is moving. Your sell is moving. This 1 minute is very, very, I prefer it smooth as you see it. Then you spot this one, it will pull off, move again. As you can see, anywhere you see this shooting star, you will see that price still moving down. You see it. This is an engulfing candle. You see it. Another one again is this engulfing candle. I always make sure that the candle completely engulfs the previous candle, and the engulfing candle stick must start at the previous close. If you watch here, look at where this one, you see where this one, this particular one closes here. So this engulfing candle opens here. You see it is engulfing it entirely, and this particular place must be equal. That's how to spot a clear engulfing candle. Before you know, there are so many candlesticks. Even this particular candlestick is a sign of reversal candle, but I'm not going to this is because this is not actually what I know that Dave have taught people on candlestick pattern, so I'm not supposed to move into it deeply. So these are signs. This one is another sign. This one is another sign. Engulfing candle. You see that price push down, continue pushing down, continue pushing down. Look at this one, continue pushing down. All of them. There's no place you see. This particular 3 candlesticks are my first entry trigger that I use. And once all these are met, I'm clear. Then another one again is double top or double bottom. Is simple. As you can see, I'm waiting for price to form a double top here. As you can see, I'm waiting for price to form a double top here. Let me clear this, making the chart look rough. I'm waiting for my candle I'm waiting for you to give me this. Once price gets to this place, you see it's a double, it will give me a double top for me to say, but I will not use only that double top as my entry criteria. I always spot that. I always wait for same shooting star or engulfing candle before I will move in. Even on higher time frame, I always make sure that I spot that. Let me give you another example of a double bottom, double bottom and double top. Okay. As you can see, here is M pattern. Here now, first price came down, retest the area, and now came down again. If you change this to line chart, you will see the M or W bottom. As you can see, you can even use line chart to know all this. Let's spot another double. These are head and shoulder. Let's spot another one. I don't normally use head and shoulder. Sometimes I do, but if I'm entering with I'm looking for a clear W pattern. I'm looking for a clear W pattern for a bullish sector. Okay, let me go down. If I go down now, alright, spot one. Okay, look at one here. Look at one here. Line charts can even give you what you want. Like if you want to create a pattern, see double top, double bottom, sorry. See now move, retrace, another double bottom, move, retrace, move, slight double bottom with slight divergence, move, formed an inverted head, and look at the shoulder. Look at another M pattern. Anywhere you see it, you see that price will move down. This is another entry signal that I normally use, M pattern or W pattern or double top or this. So but note that not every trade you take that is going to move in your way immediately. Sometimes it will range, like here now. Like here now, you see this one. You see how price move. Oh, this one even move in one place. Sometimes it will not. It's not always. It's not always that. You have to learn how to be patient. You need to be very patient when you are taking your entry. Sometimes when you've taken the entry and maybe price started depleting, like here, you entered here, you watch what price did here. Price now stay moving back a bit. You hold on, just hold on. The next candle, move down to this place. You now start pulling back again. Some people just go off the market. Just hold on. You have already gotten everything that you want to get. Then another thing again I want to discuss on here is fib. How to get our zones and how to know where price will reverse from. Now let's use fib to know our levels of retracement. As you can see here, price is it was moving in an uptrend. So if I'm to take my fib, I start from this low, from the swing low. Okay, now take your fib. You now place it from here to here. This is the 4-hour time frame. Sometimes I use line charts to get my. Sometimes I use line charts to get my levels. Once maybe the movement of the market is not clear, I will use line charts. If I use line charts, it's better for me because I normally take my take profits on the zones on line charts. So I prefer, sometimes I will just use line. Fib is a personal indicator. You can choose what you want with fib, but after everything, it must give you the same thing. Okay, look at how price respected all this. Look at the zone. You can use it to mark out your zone. If you don't know how to mark out your support and resistance, you can use fib to mark it out. Look at the zone and all these places that